Numbers looked very good. Valuations have run up, but the numbers fantastic.
Oh yes, and I expect the stock to be in the green and perhaps, buck the market trend. On all fronts, really, Hero MotoCorp performed very well. Whether it was the revenue growth, much better than expected at 15%, the profits crossed 1,000 crores for the first time in a single quarter. So that was quite a milestone for Hero MotoCorp. And the margins, gross margin expansion, operating margin expansion. So it was purely operating leverage which they could benefit on. Now the management has undertaken a massive cost-cutting program called LEAP. And they did mention that apart from lower commodity costs, it is the cost-cutting program which has helped them in their margins. So overall, the margins went up to 16.2%. These are record margins for the company. If you adjust for excise duty, etc., then the margins are higher at about 17% odd. So that's very good. Now, gross margins have also gone up 200 basis points. The raw material cost as a percentage of sales has come down as well. So very good numbers. But as you rightly pointed out, the stock is not cheap by any means. It's trading at 17 times FY18. So it is on the expensive side. Brokerages are a bit cautious here on because there is some channel checks indicating that the festive season has not gone off as well as expected. So maybe here on volumes could taper. CLSA says that it's a strong quarter, but the second half could be soft. Retail growth is likely at mid-single digits this festive season, which is not a good thing. There's a high risk of a sharp drop in volumes. The valuations are high, so they reiterate their sell call. Remember, the two brokerages I'm talking about already have a sell call on Hero MotoCorp, so perhaps they're trying to even, justify their call. Citi maintains a sell as well with a target price of 29.20.
Okay, Sonia, we'll let you go on that. Thanks so much.